Welcome to Gold and Silver, Diversification in the Age of Uncertainty, featuring Wall Street Journal best-selling author Robert Weidemer in Washington, D.C., and from the Monex studios in Newport Beach, California, your host, Mike Maroney.
Good afternoon. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. We're going to be talking with Bob Weidemer, the author of Bubble Economy, Aftershock, and Aftershock Investor. And Bob has put together a very special index for Monex Deposit Company. At the beginning of the year, he felt that it would be the year of uncertainty, and he felt that an uncertainty index would be very approachable and usable as far as individual investors were concerned. So each and every month we interview Bob and we talk about the things that make up this index and talk about some of the key things that are happening around the world that are creating uncertainty. And today, Bob, I think what we're going to talk a little bit about to start off, of course, is the current valuations as far as the U.S. stock market is concerned. I found it interesting that Warren Buffett the other day was quoted as feeling as if this stock market was getting a bit overvalued based on the current valuation in comparison to GDP. Could you explain that a little bit?
Yeah, so basically what Warren Buffett, let's keep in mind, this is generally he's a classic value investor. He looks fundamentally at whether the stock market's worth it as a sign of whether to get in. And one way he tells whether it's worth it, or meaning too highly valued or low valued, so you should buy, is by looking at the value of the stock market relative to our entire economy, the GDP. So he thinks that if the value of the stock market's about 80% of our GDP, then that's a pretty good time to buy. At 100 or so, basically when it's the same value as our entire annual output or economic output, he's kind of like, think about it. And when it gets over that, like 120, you forget it. And right now it's about 139%. To put that in a perspective, I think we can all understand at the dot-com days when the market was at its highest valuation, it was 143. So we're almost at the same valuation by Warren Buffett's metric as we were in the dot-com days. That's very high. And as he says, he thinks stock market investors are playing with fire at this point getting in.
Now, Bob, do you think some of that is predicated on the fact that everyone has been looking for a corporate tax break, and inevitably that corporate tax break would add value and profits as far as the stock market in general is concerned?
Well, there's no question that when Trump was elected, that was part of the idea, is that we're going to get a corporate tax break to say 20%, and that's going to help earnings. And it probably will. But the reality is most corporations don't pay the top tax bracket. As we know, many corporations don't pay much in taxes at all. So it's not clear how much that's going to add to earnings. And again, we have to see it get passed. We're in the talking stage. It's been a year. We're still talking. We'll see what really gets passed. But I would say that has to be baked in at this point. The market's already up over 20% since Trump got elected. So I think that's pretty well baked in. That said, there's a lot of uncertainty. Is maybe it can go higher. I mean, the reality is, I saw a recent poll that showed most people, I think it was a vast majority, like 65%, did not feel that Trump had come true on his economic promises, that we were growing as well as Trump had thought. So there's disappointment out there, but it's sure not showing up in the stock market, which to me leads for a lot of uncertainty as to just what kind of help we're going to get from a tax cut, whatever it may be, on the earnings side, a tax cut on the corporate side that will improve earnings. We'll have to see.
Now, it's interesting because you talked about the stock market being up approximately 20% for the year. I looked at gold this morning, which just so happened to be up about $14 an ounce. And overall, so far this year, gold is up well over 10%, even in the face of this incredible rally in stocks. Now, do you feel that investors are starting to make the move as far as diversification into gold because of the uncertainty and the overvaluation? Or are there some other reasons that you think people are parking money in gold?
I think it is that underlying uncertainty. If Warren Buffett's worried about market valuations, everybody should be. On the other hand, I think the reason gold has got even higher, although that's a pretty good run, as you point out, Mike, so far, well over 10%. I think the reason it has gone higher is that the market does seem to be pretty impenetrable right now. I mean, it's Teflon coated. It never seems to go down for very long. But all that's got to lead to a lot of uncertainty. So yeah, I think that's the reason gold has got its gains and rebounding now, and also uh, we'll have to see. Normally at the end of the year we get a little bit. I mean, it might go up, might go a little bit down, but in January I should say we tend to get a real nice upturn, and maybe we'll talk more about that in December. But the last few years we got a real nice upturn in January, so maybe some investors are also seeing a little bit of that and trying to get some gold in now for that reason, which would be smart, I think.
Now, obviously, a lot of people have been talking about the Federal Reserve as far as um, drawing down in their balance sheet, the 4.5 trillion that currently sits on their balance sheet. But one of the big things that everyone seemed to be focused on is who would be the new chairman as far as the Fed is concerned. What's your view on Trump's choice, and how do you think that will inevitably affect the market?
Well, his choice is clearly going to be Powell, and I think it's a good choice from the standpoint of the market. And he's indicated he supports Janet Yellen's policies of continuing to slowly raise interest rates and to slowly pull some money out of the economy. So I think he's the most market friendly by far, certainly as opposed to the economist Taylor, who would have been more likely a more traditional conservative, tight money person. I think Trump's pick is going to be more friendly to the market. And one reason I think the market hasn't certainly gone down on the new pick, which sometimes it does, because it can just fear what a new Fed chairman will do. But I think in this case, I think he'll continue to raise interest rates. Certainly, as long as the market stays, reasonably in reasonably good shape, which it is, the stock market. I don't think they're really looking at the economy as much as everybody says. I think they're looking at that stock market, and he'll continue to raise interest rates until, of course, that has problems. Then that policy gets reversed. But expect an interest rate hike in December, almost for sure.
Now, it's interesting, Bob, because you talked about the seasonality of gold, and one of the things that we were looking for and hoping for is maybe we would get a little bit of a pullback. And it looked like on Friday that potentially we were going to get that opportunity. Then over the weekend, we had some geopolitical issues prop up, and a lot of people seem to be very concerned about what's happening in Saudi Arabia. Could you talk a little bit about that and give us your idea as far as how that may affect the uncertainty index?
Well, it affects it a lot. I think what's happening in Saudi Arabia is a big deal. This is an intra-family fight that really they haven't had since the mid 30s. The House of Saud, the family of Saudi Arabia, the royal family that owns sort of everything, has been relatively stable. They've been very good about sort of giving each part of the family some military power, some economic power. They've done a good job of sharing. What a good family office, in a sense, should do. That's just changed. When you run around arresting other members of the family, as they've done, in fact, one of the princes was apparently shot in the firefight when he was arrested. Maybe it's coincidental, but another prince is also was killed in a helicopter crash near Yemen. But when you run around arresting princes, shooting, this sort of thing, this isn't a happy family anymore, right? This is Family Feud, and that's not. That's a very unstable situation. And this is a fairly key investor in our stock market. Obviously, a big player in the economic scene. In fact, one of the people they arrested was a prince who's one of the largest active investors in the U.S. market. In fact, is supposedly worth around $30 billion, and so there's a lot of uncertainty in our markets and around the world created by this. It's not over. It looks a little like kind of the what was it, the Godfather series, and the families fighting with each other instead of what it was one happy family before, who worked out the differences. So I think this is a problem that's going to continue. It's one reason I like gold, because it does go up when you have these uncertain situations and political situations, and it's reacted as I would expect. And again, I don't think the Saudi situation is going to calm down anytime real soon. There's bound to be some aftershocks, so to speak, from what's happening within the Saudi family right now over the next few months.
Needless to say, we've been worried about that potential black swan event that we didn't know where it was going to come from. Suddenly, over the weekend, a missile was fired from Yemen. All of this inter-family squabbling is taking place. But somehow or another, people seem to be connecting Saudi Arabia more with the U.S., Iran more with China and Russia. And there's some hypotheses being thrown out there right now that really end in some bad type of geopolitical problems. I mean, the word World War III was being talked a little bit about this morning.
Yeah, again, definitely problems. World War III, who knows? But I definitely some real instabilities. It's more than a family squabble going on in Saudi Arabia. It's a big deal. Iran is clearly, in fact, Russia or Rosneft, their oil company, just made a deal to invest $30 billion in Iran's oil drilling and infrastructure. So those relations are getting very tight. The U.S. is getting kind of left out, frankly, in all of this. We're backing Saudi. We, are backing this change within the Saudi family. We haven't really formally done it, but we're supporting MBS, the Mohammed bin Salman, as the new, and he's the prince that's driving all these changes. We're sort of backing that. Again, we'll see. One thing for sure is this is a tinderbox situation, and I would say at least with what's happened in Saudi Arabia, it's gotten a lot smokier, and where there's smoke, there's fire. There's some big issues coming, and yeah, gold's one of the things that people will jump to, especially in Saudi Arabia. Let me add, the Middle East is a big buyer of gold, and the government's running around freezing assets of these princes, like Alawid, who has all these investments in Citibank, Twitter, Apple, so forth. A lot of these people like gold because it's easy to hide and keep from having the government of Saudi Arabia take it. So just the demand from the Middle East would be significant.
So, Bob, in review, we're looking at a situation where the stock market's at historical valuations. Obviously, no one's quite sure how this tax cut will play out as far as when it finally gets through Congress. And maybe if the stock market is overvalued, we could start to see sector rotation. One of the things that's been evident over the last few weeks is we've had a breakout in the value of the CRB, or the commodity index. And a lot of that has been predicated on oil hitting a 2-year high today. And normally when oil moves, it typically leads the rest of the commodities higher. So precious metals could easily join in on this rally. And then when you throw in that geopolitical uncertainty, things could really heat up in the next 6 to 8 weeks.
They could. They really could, and that's what people forget is even at the time when times look very good. Again, back to January 2000 or February 2000, we were only a month or two away from a big, huge correction in the stock market. It doesn't take, especially in times where things are highly valued, for anything to really kick it off. And what's happening in Saudi is more than just anything. So, yeah, there's a lot going on. It could change. It could be a smooth ride at the end of the year, but it could easily change big time as well. So we know that it is going to change. It is going to get a lot more difficult, as you say, matter of timing. But yeah, lots happening, Mike, that could blow up easily in the next few months.
Well, 2018 looks like it's going to be a very interesting year, and I think investors should be aware of the type of uncertainty that exists out there. So getting a copy of your report, seeing a copy of your uncertainty index would certainly be helpful. Hopefully people can give us a call so we can get something like that out to them immediately. And Bob, I look forward to talking with you next month so we can discuss all of the things that are taking place that affect the price of gold.
Sounds very good, Mike.
Fantastic. Have a great week.
You too.
All right. Bye-bye.